Were you one of the few, I guess, that was able to spot these moves and buy some of these ETFs, which I think it's fair to say were fairly heretofore unknown?
No, that's not what we do. But everything in bonds, if you look back over the last year, everything has been fantastic for bonds. But looking forward, I think it's much more about preserving capital in all financial assets rather than making a ton of money.
So you think it's the preservation of capital, not necessarily the return on capital. So what do we do?
Well, I think we're clearly late cycle, and you want to stick to your late cycle playbook, which means stay away from the most aggressively financed investments, but also be careful to not overpay for quality. I think that's a real danger right now.
What is quality to you right now, Bill?
Well, I'm involved in the high yield bond market, and the double B space is where investors traditionally go to move up in quality, but the double B space is very expensive right now.
Yeah, and that's one of the reasons I showed these ETFs ahead of you, because you are a credit guy. I know that you're more in the high yield space, but if your edict is to find high yield investments, but you're saying they are basically overpriced or a little risky, what are you doing?
Well, there are some reasonable ideas out there, and we're concentrating in those reasonable ideas. I mean, right now, what you don't own is probably more important than what you do own. And we're sticking with our top 10 ideas much more than our 90th. We're fairly concentrated. We aren't invested at all in our 90th best idea. We're focused on our top 10.
Can we read between the lines and suggest perhaps, Bill, that cash is not a horrible place to be right now?
Cash is not trash right now. I absolutely agree with that. It gives you great optionality if assets reprice, which I expect they will.
Do you expect this, there's sort of this view in the equity market. I know you're a credit guy, but in the I know you guys talk about equities, I'm sure, too, which is at some point you're going to see a re-rotation out of bonds back into stocks, because bonds, many of them, as we just showed, may be a little too hot.
Well, I think that will be the case at some point, but I think we need to have dramatically different trade policies to get there. I think that as long as tariffs are escalating rather than being walked back, it's going to be difficult for risk assets.
So what happens to both the bond and the macro markets if and when, Bill, and it's a big if, I guess, we do get some kind of a resolution to the trade deal? What then?
Well, I think that would be very beneficial to risk assets, and it would cause the yield curve to steepen and move higher. So it would be difficult for high-grade bonds.